Hey guys, it is August the 25th, and we actually had a lot of earnings now that even though we're kind of slightly out of earnings season. So that was kind of uh fun as far as that goes. But there's some pretty big earnings reports. So I am going to go through what I saw in the technology front, and also we're going to go through some macro, and then we're going to take questions. So let's see. Let me share my screen. You know what we always say, past performance, it's not indicative of future returns. When you look at the big indices, you can see everything's green. And it's a very kind of weird market today because you do have kind of it's really kind of range bound in some ways. Like I wouldn't be surprised if we end up flat on the day. To be fair, oil's been bouncing up and down as it tries to get to 95 but fails. But you know how I feel about that. I feel like it should be at 95. But like I said, October is really the month where you'll start to see the rubber meet the road, because at that point we'll have to know what's going on in Europe. FinViz, my favorite viz. I'm going to refresh it just in case it's a little bit stale, but essentially this is what's going on today. Tesla giving it back post split. And, you know, you've got big cap kind of running. It's very random. It's very mixed. So there's not, in my opinion, a lot of direction. I'm kind of bummed because I was hoping to get more Berkshire under 290, but let's see how it goes because every day is a different day. But I think given the IEA report, and the fact that people are just trading these weekly oil numbers as if they aren't kind of potentially in error at times, one way or the other. The swings are pretty crazy and they're giving you great opportunities. But since the number came out, the bias this week is very positive. I'm a long-term bull, as you know, in these names, despite knowing that the vol can be quite intense. And of course, my fertilizer names, which you know I'm always on top of, are trading up again today. I'm very excited about that. The only thing I would keep saying that's on the long-term list that I always keep hounding upon is Pfizer. It really doesn't deserve to be beaten up as much as it is. I know lots of people have arguments that relate to post-COVID. That's where the revenue is coming from, la, la, la. I just can't is what I'm saying. I mean, we're now at a 3% dividend yield, usually between a 3 and a 4% dividend yield if you're going to buy it and hold it for the long term because you just don't feel like trading, but you just want to own this one. That would be approximately, it's kind of in that range right now. So that's kind of the overview of what it's looking like today, but we are kind of out of the last of earnings. We get Ulta this evening, and then really there's not much else going on in the S&P 500. It's really all the smaller cap names, mid cap names, or the non S&P names. So these are tech companies that don't necessarily have earnings that report. So I'm going to go through a little bit of what I saw on Nvidia. Salesforce to me was just a reiteration of what they kind of have been doing the last few quarters, which is taking all of the earnings, because top line isn't single digits, whatever, not enough to really justify these kinds of multiples, but then they have to really reinvest in this business and get it to a certain point. And that really has to do with all the acquisitions that they're still swallowing from last year and before. So, you know, that kind of is what it is. Autodisk was crazy good, but let me kind of get into that more directly. See what we got here. Okay. So let's just talk about tomorrow. We still have PCE and we do have the Fed speaking. So that will be kind of relevant. Just keep that on your macro radar. And then with that, let's go into the more important numbers. Nvidia trading up after trading down on earnings. This is a bad earnings report. Let me just be very crystal clear. The market wants to trade it back up. That's fine by me, but this was quite bad. And I know there's going to be analysts that be like, hey, you know, Nvidia, it's the leader. It's still got one of the best products. I get it. That's fine. This multiple really requires a certain behavior from the stock as relates to what we need to see in earnings. And it really came from gaming. So I just wanted to show you directly what was in the release that to me was relevant. It's so cute because usually they do a whole deck, and this time they did a single slide just to give you a sense for the fact that they knew they were gonna have to talk their way through it. I give her a lot of credit though. She's not hiding what happened this quarter. And I think that's the right way to act as the management team. Other management teams, you usually try to spin it. She didn't try to spin it. So I appreciate that from her. We are talking about quarter over quarter, some pretty aggressive and steep slowdowns. And that slowdown is really coming from gaming. Now, I really think it can't be emphasized enough. And she did talk to it on the call, but for whatever reason, my suspicion is the street is like, nah, it's fine. The slowdown wasn't just kind of like, oh, let's slowly slow it down. This was like a grinding halt. This number, if you look, they gave you all the way back year over year so you can compare, but we have to go well before Q3 of last year to get a sense for how fast this and how abrupt this slowdown was in gaming. And the interesting thing is, even though things like Activision are selling off and some of the other gaming names, this isn't gaming like people aren't playing video games gaming. This is actually really, it's crypto, okay? Let's be really crystal clear. It is the NFT and crypto speculative portion that has driven this to a grinding halt. That is crystal clear. And the reason that is crystal clear from what they're saying is we're not necessarily seeing quite the same grinding halt, if you will. We are seeing definitely weaker numbers from Activision, Electronic Arts, and Take-Two. That's fair, but it's not like this. This can only really reflect what's going on in crypto and the NFT space. And so that's why they're saying this is a 2 to 3 quarter fixer upper, so to speak. And in that regard, it's hard for me to be like, yeah, I'm totally going to come in and support the stock here, but apparently others are. That's how it's up 2%. The data center business, though, is continuing to grow very aggressively. The year over year is very aggressive here. And that's what brings me to the second thing that I'm going to talk about, which is Snowflake. Snowflake really does deserve to be up and continue to rally. You know, I'm a long-term fan on it, but it isn't my classic sort of name. I do want to show you what I saw. But this data center up is in line with everything else we've been seeing for all of the other names that have some kind of data center exposure, with the exception of Intel, driving me crazy. Intel has data center exposure, but it couldn't get its numbers to lift. Even companies that had real estate, that they basically rent real estate to data centers, even those guys did great. So that is how crazy it is in data center. And Snowflake in particular had a wonderful quarter, but I do want to go through it a little bit. Okay, Snowflake is not in the S&P for a reason, and that reason is it doesn't make money. Okay, it's still in that kind of early stage growth phase. And although I am very crazy bullish about Snowflake, I do just want to go over it a little bit. It definitely deserves to continue to rally. And I wanted to make sure that what was understood is that this crazy revenue increase, and then you don't necessarily see it dropping to operating income and the earnings line. It really had to do with this growth in sales and marketing and research and development. And they're taking a very specific bet that I personally am okay with, even though I do not currently have any kind of big position in this. But I am actually okay with this because they do have to compete aggressively. And their business model is such that once they get in, they grow and they stick. And let me be really clear, that is a bit different than the other data-esque type plays. And I always find it interesting because it's very clear to me that some of the investors on the call definitely don't know what this company does for a living and where it sits within the data stack. Specifically, if you think that this company competes directly with Microsoft Azure and AWS, then I would encourage you to Google search Snowflake with Azure and AWS, and then try to from there kind of investigate a series of questions to understand what this company does. There is a reason why Snowflake looks the way it looks and does what it does and is such a unique solution for enterprise, for large organizations, if their desire is to transition their legacy systems into this new world of data that's happening. They are actually the best solution for a lot of very specific things. If your goal is to not crash your system or have massive transitional issues as you're transitioning the data over, and your goal is to maybe start operating the new systems while still managing and trying to kludge together the old systems. That's really, in simple terms, hopefully that was actually simple terms, what Snowflake does best. And for that reason, I'm comfortable with the fact that this huge R&D and huge sales and marketing expense is the right call. I don't know that it's fair to say that they so directly compete with Microsoft and Amazon, and even to a lesser extent, Google, because quite frankly, Google is in some ways a solution to this, but their solutions are so indirect And the one thing that could always be the thing that could creep up behind them is another company finding unique solutions as in this space without getting into more detail. And in that regard, the best way to stop that from happening is this. Additionally, for anyone that's trying to do the deep dive on this, I would really make sure that you take a look at the fact that they always have this massive, prepaid. One of the liability items is the fact that people pay, and then you got to wait for the service to actually happen. So that cosmetically makes it look a little funky on the timing of cash flow from an accounting perspective, even if they receive the cash, that sort of thing. So that's always a challenge, but this is the right spend, in my opinion, for this type of growth company. And then the last thing I really want to go over is Dollar General versus Dollar Tree. Dollar Tree is getting clobbered. I have mixed feelings about it because it wasn't that bad of a quarter. The real thing is how they were guiding forward. And a lot of it had to do with mix, and also for Dollar Tree, mix, and also they're still fixing Family Dollar. And that was really interesting because they literally announced almost an entire new slate of managerial talent that's going in there. But I think what Dollar General did was pretty good this quarter, and they've been a little bit of a laggard relative. Inventory was a big discussion topic between the two, but I think it's hard to understand where Dollar Tree kind of maybe did it a little bit wrong without seeing what Dollar General said. And if you push them two together, it's quite fascinating for how to think about the consumer at large for all the general merchandisers, from Walmart all the way down to Costco. And that's this. I love that Dollar General gave us this. You can see, I mean, apparel at Dollar General, that's not really, that's, very specific delicates, let's call it, do you know what I'm saying, for the most part. And then to lesser extent, like semi-consumables, like t-shirts, et cetera. It's not going to be big apparel. And such a small component of what they do, period. Consumables was up a lot. Seasonal, we already knew from everyone else, was a mixed bag as far as that goes. And in fairness, seasonal is also up against tough comps because, and it will be up against tough comps next quarter, as well as we have back to school and the such. And that just has to do with the nature of kids going back to school in a very different way than they did last year. And then home products flat, doesn't matter anyways, because it's just a small part of the mix. But the point is, consumables is really where people are making their bread and butter. And that just speaks to the idea of how people are spending their dollars as relates to inflation in this kind of environment. And with that, I will actually keep it brief and hit stop share and see if there's any questions. How's it going today, guys?
Hey, good, mate. Nvidia, their multiple is like 45, correct?
Yeah. I mean,
what are their peers multiples?
I mean, it's all over the map. It's really hard to comp Nvidia to others. I mean, you could, AMD is probably the best one, but AMD crushed the quarter and will not have the same kind of exposure like their mix is just different. And if you go to the worst of the bunch, like an Intel or like some of the other ones, I mean, because you can't really compare some of them because of what precise types of chips they make. Then those are in the single digits areas. That's why it's so hard, because usually you almost have to do some kind of multiple to growth. Do you know what I mean? So it's like price to earnings to growth, or enterprise value to EBITDA to growth. Otherwise, it wouldn't make sense across the entire spectrum of semis right now.
Right. I think the narrative on Nvidia is probably going to be, hey, crypto is going to get better and gaming is going to get better, right?
It's the timing. Yeah, it's the timing. Right. And what do you then give them credit for the next 2 quarters? Because even they're like, look, this is probably going to take 2 quarters at a minimum. I mean, because you got to think, I think if you think about the velocity of how, or the deceleration, I guess, the unvelocity, I don't know, the quickness with which and the abruptness with which this is slowed down, it's both because you had so much demand for chips that were specifically related to that business line, if you will. I mean, to the point where they even created a chip specific for the mining community. I want to say that was like 3 or 4 quarters ago, just because they wanted to just separate those 2 business items. it's an aggressive slowdown. And then you've got people that have exited the mining business, if you will, and dumping chips onto the market. So that's, I think,
Okay.
why
So you're saying they've already sold those chips. There's not going to be more demand, correct? In the next couple of quarters.
They produced, let me say it a little differently because I see what you're saying. They produced for a certain amount of demand. That demand did not happen. And so now they said on the call that it would take at least 2 to 3 quarters to slowly work through that portion of the inventory.
Okay, they overproduced. All right, got it.
I mean, yeah, they produce for a demand that is not there currently. I don't know what the nuanced terminology would be, but yes, you could just say they overproduced, I guess, to keep it simple. Any other questions?
Oh, okay. China, we want to be in China if it turns.
I know. I'm scared until I get closer to November because there's still like until all how I feel about that. You got to wait until November. They have an event in November, and then we'll kind of see what falls out. If we're talking, 2 to 3 to 4 years, every day of the week, China, long, you got to go, right? But there's so many cards that we just don't know, and then there's so much that's being done. What we'll call negotiations, but really looks like us and them screaming at each other half the time. So violent. That's
I think if China turns, it helps everybody. I think you've said that.
Yes, I agree.
Okay.
Like, it's not in our benefit to instigate a 2-front war, if you will, or just to create, at the same time, I think for whatever reason, this administration has chosen a particular methodology in US-China negotiations that is not fun from a trading perspective. And if I was a little bit closer to that, then I would be happy to make calls on China. But I know where I know where I'm going to be weak relative to others on the street that might be a lot stronger.
Okay, thank you.
Trade China correctly right now, you're going to have to be a little bit closer to China than not even just the average. You have to be closer than the above average person. It's going to be really volatile. Any other questions?
Not for me. Thank you.
Ed, do you want to ask me a question or are you for offline? All right. He's staying quiet. No worries. No worries. All right. Thanks, guys. Good luck in this market. Talk to you tomorrow.